Understatement penalties are imposed by the South African Revenue Service under the Tax Administration Act 28 of 2011. It is important to note the key types of penalties for non-compliance or incorrect tax reporting, namely administrative penalties and understatement penalties. For the purpose of this presentation, other penalties are not discussed. On the one hand, administrative penalties are typically fixed amounts and are not directly linked to the tax amount involved. Penalties increase with repeated non-compliance. And examples include non-compliance by taxpayers with their tax obligations under the different tax acts. It can include a fixed amount penalty being added every month. On the other hand, understatement penalties relate to the understatement of tax liabilities or incorrect reporting. Both types of penalties are civil and not criminal penalties. Understatement penalties are imposed when a taxpayer makes a deliberate or negligent misstatement or omission on their tax return, resulting in an underpayment of tax. Understatement penalties are calculated as a percentage of the tax undercharged or over-refunded due to a misstatement or omission. It also includes a failure to submit a tax return, or if no return was required, a failure to pay the correct taxes. The percentage penalty imposed will depend on the nature and the extent of the understatement, the taxpayer's behavior, and any previous non-compliance. For example, consider a provisional taxpayer who failed to pay SARS on time, but due to exceptional circumstances was unable to perform his duty or obligations under the Tax Acts. Section 218 of the Tax Administration Act provides for the remittance of penalties due to exceptional or extenuating circumstances taxpayers may experience. Examples include natural or human-made disasters, civil disruptions, or serious illness. In summary, administrative penalties are imposed for administrative non-compliance, while understatement penalties are related to misstatements or omissions in tax returns that result in an underpayment. What is an understatement penalty? It is a punishment imposed on taxpayers who understate their income or overstate their expenses. Taxpayer behavior is the dominant determinant. The understatement penalty table in Section 223 of the Tax Administration Act encourages taxpayers to report accurately. However, it also deters them from intentionally or negligently providing incorrect information to SARS. If the understatement were due to a calculation error, the penalty would be 0%. This is considered a bona fide inadvertent error or a case where the taxpayer's behavior is considered a mistake if the taxpayer acted in good faith. However, if the understatement was due to gross negligence, the penalty can increase to 100% if not repeated. If the taxpayer's behavior was intentional, the percentage could range between 150 and 200%. The question arises, how does SARS apply the penalty? When SARS identifies an understatement, they will issue a penalty assessment to the taxpayer, considering the facts available to them. If the taxpayer does not dispute the penalty assessment or the request for a remission is unsuccessful, they will have to pay the penalty. Remember, SARS must prove the understatement penalty on a balance of probabilities. In the case of a substantial understatement, default penalty percentages range between 0 and 20%. The fact that a substantial understatement is the default position relieves SARS of proving intentional or negligent taxpayer behavior was involved. Note the definition of a substantial understatement in Section 221 of the Tax Administration Act. It means a case where the prejudice to SARS or the fiscus exceeds the greater of 5% of the amount of tax properly chargeable or refundable under a tax act for the relevant tax period, or R1 million. However, there is an exception. If the taxpayer had an opinion from an independent registered tax practitioner, SARS could remit a substantial understatement penalty based on full disclosure by the taxpayer. In conclusion, understatement penalties can have a severe effect on a taxpayer's finances. Taxpayers who intentionally provide incorrect information to SARS are subject to higher penalties. Thus, the more blameworthy the taxpayer's behavior, the higher the understatement penalty percentage. Therefore, taxpayers must report accurately and seek professional advice if they need clarification on any aspect of their tax affairs.